Did you know that a simple mistake can cause you to lose your entire investment fortune? Imagine investing for years, watching your money grow, and suddenly, everything crumbles because of one wrong decision. This mistake is more common than you think, and it can happen to anyone, even the most experienced investors. And the worst part, many people only realize how fatal this mistake is when it's too late. Now, if you think you know everything about investing, think again. The secret to avoiding losing everything lies in a simple strategy, but most investors overlook it. And that's what we're going to talk about right now. So stay with me until the end, because what I'm going to show you here might be the key to protecting your fortune and achieving true financial freedom. Investing is one of the most powerful ways to build wealth, but the path to success in the financial world isn't as simple as it seems. Many investors start with big expectations, but end up losing everything due to a basic and dangerous mistake that almost no one talks about. The fact is, no matter how well you prepare, one mistake can turn years of effort into a complete financial disaster. Now, before you think this only happens to inexperienced or new investors, know that even the most qualified investors have made this mistake and suffered great losses. What I'm sharing with you today isn't a trick or a magic formula for getting rich quickly. On the contrary, it's an important lesson that can protect your investments from future disasters and ensure that you make smart, safe decisions with your money. By the end of this video, you'll understand exactly what you can do to avoid this fatal mistake and take control of your investment strategy in a more solid and reliable way. Let's get straight to the point, and throughout the video, I'll show you how to protect yourself from this mistake without complication in a practical and effective way. Before we go further, if you want to keep receiving valuable tips like this to protect and multiply your money, go ahead and subscribe to the channel. This way, you won't miss any content that can transform your financial journey. Now, let's understand the mistake that could cost you a fortune. Investing is a journey that many of us begin with big dreams and expectations. The promise of growing our wealth and achieving financial freedom drives us to take those first steps. However, without the right knowledge, this same path can turn into a minefield where a simple mistake can destroy everything we've built so far. The big question is, what is this mistake? How can you avoid it ruining your financial future? The most fatal mistake many people make is the lack of diversification in their investments. Believe me, many people, even experienced investors, begin investing by concentrating in a single asset, whether it's a stock, a cryptocurrency, or even real estate. This may seem like a good strategy at first, especially if the chosen asset starts appreciating rapidly. You look at it and think, this is growing, why not invest more? The problem is, when the market turns, and it always does, your fortune can disappear in the blink of an eye. Now, imagine the scenario. You put 90% of your money into the stocks of a single company that's booming. For months, you just see the numbers go up. Your portfolio appreciates impressively, and you start to think you've got the magic formula for success. Then, suddenly, something unexpected happens. A crisis in the sector, a change in the company's policy, or even an internal failure. And in an instant, the value of your stocks crashes. Instead of seeing your investments grow, you're faced with a significant loss. And in the worst-case scenario, you lose everything. This is where diversification comes in. Diversifying means spreading the risk of your investments, not putting all your money in one place. And the best part? It doesn't mean you have to be an expert or spend hours studying the market. Diversification is a simple and effective strategy that any investor can apply, whether you're a beginner or a veteran. How can you do this practically? Here are 3 essential steps to implementing good diversification in your portfolio. 1. Invest in different asset classes. Don't concentrate everything in stocks, for example. Stocks can yield good returns, but can also be volatile and unpredictable. Consider also including fixed income securities, which tend to be safer and more stable. Additionally, real estate, real estate investment funds, and even alternative investments like gold or cryptocurrencies can help balance your portfolio. Each asset class has its own characteristics, and their behavior can vary greatly, which helps reduce risks in the long term. 2. Diversify across sectors and industries. Investing in companies from different sectors of the economy is one of the most effective ways to avoid large losses. For example, technology companies can be highly profitable, but are also very sensitive to economic changes and regulations. Health or consumer companies may be more resilient to these fluctuations. If you spread your money across various sectors, you reduce the impact of a potential collapse in a specific area of the economy. 3. Invest geographically. If you're an investor focused on a national market, a local economic crisis can negatively affect your entire portfolio. Therefore, investing internationally can be an excellent strategy to diversify even further. Imagine if you had invested in global markets like the United States, Europe, or emerging markets. When a crisis hits Brazil, for example, you could be protected by the strong performance of stocks from other countries. Geographical diversification helps spread the risks and improve your portfolio's stability. You might be asking yourself, but how much of each of these types of investment do I need for effective diversification? The answer depends on your risk profile and financial goals. But in general, the recommendation is never to allocate more than 30% of your portfolio in a single asset class or sector. With that, you can balance the potential for gains with the security needed so you don't lose everything at once. Now, it's important to emphasize that diversification doesn't eliminate risk. No one can guarantee that your investments will never lose value. However, diversification is a smart way to reduce that risk and build a more balanced and robust portfolio, especially for those seeking sustainable growth in the long term. And here's the key point. Diversification is not just for experienced investors. It should be part of the strategy for anyone who wants to protect their finances in the long term. If you're new to investing, think of it as a safety net to avoid unpleasant surprises. On the other hand, if you're already experienced, diversifying your portfolio can be a way to maximize your gains without taking big risks. If you're finding this content useful and are starting to see how diversification can transform your investment strategy, don't forget to leave a like. This helps us keep bringing valuable tips like this, and it motivates us to create even more content for you. Now, let's keep going, because there's still so much more to learn about how to apply this strategy effectively in your portfolio. Now that you know the importance of diversification and how it can protect your investments from major risks, it's time to put this strategy into practice. Remember, the secret to a secure and successful financial journey lies in balance, and diversification is one of the best ways to achieve it. If you still have questions about how to apply these tips to your portfolio, don't worry, we have many more videos here on the channel to help you. Take a look at the videos appearing on the screen now. They'll help you take the next step in your investment journey. Don't waste time. Click and keep learning with us. See you there, and we'll see you in the next video.